Hey, Harlan.
Hello, Mike. Good to see you again today. I really enjoy these conversations that we have with each other.
I do
What's this?
too.
You've got a screen up here already. We've been talking about being a passive investor with your investments in syndications, and we've talked about a number of things. Today, we're going to talk about what, retirement accounts?
That's right, investing with your retirement accounts. And yes, most people don't know you can use your retirement accounts to invest in real estate.
So I can use my Schwab account to invest in real estate. I just call them up and say, "Can I invest in real estate with you?"
Schwab tends to favor stocks and bonds. They're not going to let you invest in real estate, and Fidelity's not going to either.
So there's some custodians that they choose not to do that. They focus on something else, but you and I have found custodians that will allow us to invest in real estate. I've been doing that for over 10 years now.
Yes, and I have too. It's been one of the first ways I was investing in real estate, and you're able to buy property, hold it in the IRA, and all the returns, the IRA invest in the real estate, and then all the income from the property comes back into the IRA. So we don't touch the funds ourselves. Everything flows through the custodian.
So if you're listening to this and you don't realize you can do that, give us a call and we'll help you realize some of the excellent custodians that are around the country right now that do this.
That's right. And some of them have changed recently. So we'll tell you the latest and greatest of what we like to work with.
There you go. And you put the pro down here of hands off, and actually it's required hands off when we use our IRAs, isn't it?
That's right. We are not allowed to do physical work on a property. Some people like to go out and they'll buy a distressed property and go out and work on it, but you don't do that with retirement accounts. You are not allowed to work on the property.
And
So,
that would mean being a managing partner as well is probably not allowable in a with an IRA funding.
yeah, that gets you in a gray area. I don't think you could be the managing partner. You've got to, I mean, well, there are some places you can do checkbook IRAs, but I tend to favor keeping my hands off so that there is no question. Yeah,
And most of the people listening here want to be passive anyway, so this is a great way to be a passive partner in a syndication. And
that's right. Yes.
and what's hands off mean here, Mike?
Well, it means that you are a limited partner. You can invest in real estate and, like limited partners don't do any of the work. They invest funds, but and they enjoy the returns, but they are not responsible for the day-to-day operations or the oversight of the syndication.
Yeah, so whether you invest with your own funds or with your IRA funds, you can be a limited partner and not have all those hassles of being a managing partner. And you and I know about that. There are
That's right.
advantages to being a managing partner too, but this is one that being a passive partner is needed by the managing partners. You're very helpful, and you get a good return without having to do all the work, as you say. That's right.
That's right. And the next thing is that you get more leverage in a syndication than like a single family home.
Hmm.
And you don't have to use your own credit because you're not allowed to use personal credit when you buy something in your IRA. So if you are wanting to leverage, for example, a single family home as a rental, then you have to go to a non-recourse lender. So you can't just use your credit to get the loan on the property. So you have to go to non-recourse lender for a non-recourse loan, and that typically limits you to 50% loan to value.
And with using syndication, we're using more like 65, 70, 75% uh,
That's right.
leverage, which just really multiplies the return you can get within your IRA.
That's right. And that helps you continue to build equity during the period of ownership. So while you're getting some cash flow, you are really building the equity at that time. And that's what the leverage does for you.
Hmm. And we talked a couple of weeks ago, Mike, about this third point here, converting traditional to Roth. And there's really a secret sweet way to pay less taxes if you want to convert from traditional to Roth by using a syndication.
That's right. We talked in a lot more detail, but briefly, we'll just mention that you can invest in a syndication with your traditional IRA, then have an appraiser evaluate the investment, and then you end up getting a significant discount because of that appraisal. You're able to pay less taxes when you convert to a Roth.
Mm.
And then once it's as a Roth, then all of your gains are tax free.
Sweet sailing all the way and even
That's right.
beyond. Yes. So there's some pros of investing, but you have a couple of cons down here on your chart, Mike.
That's right. We do believe in transparency and want to let you know that it's not all roses. There are a couple of thorns in here. So, uh, one of which is unrelated debt financed income. And this is something that IRAs are subject to. Oh, excuse me. And not solo 401ks, but IRAs are. So, the unrelated debt financed income means that when you earn income on an investment that is leveraged, then you end up paying a tax on the leveraged portion.
Mhm.
So if the investment is 70% leveraged, then you would pay taxes on 70% of the income.
And those taxes would come out of your IRA, or are they out of your personal taxes? Do you know how that works?
I believe it can come out of the personal taxes. And that is a question for your accountant because I can't tell you exactly what the tax rates would be. Everybody's different. And it depends on the size of the investment, how much the distributions are in a given year. And there are, you know, those
And
factors.
yep, with those that there were probably a third of the people that invested with us in our Tallahassee property syndication, and they found out that the tax was not all that significant actually. It's there, it's different, but it's not a big hit. But we want you to be aware of that.
Right. And the overall, the returns in the syndication are sufficient that it is worth, having that extra tax if it does enter into
Yep.
consideration.
Yep. As we've told you before, syndications have a really good return on investment, and this allows you to pay a little extra in taxes there,
Yeah.
even if you
So,
yeah. And
and then,
no depreciation. Yeah, that's true. You can't take advantage of depreciation uh, in the IRA, can you?
not in the same way that you do outside of the IRA. So,
Hmm.
you know, you can use it to offset some of the income when calculating the UDFI,
Hmm.
but it generally doesn't help you on your taxes like it does outside the IRA. And this is one of the reasons some people say that you shouldn't invest IRA funds in real estate because you miss out on the depreciation. But they're asking the wrong question. The real question is where when you have funds in a given place, such as in your IRA, where can you get the best returns?
Hmm.
So if the money's in the retirement account, the question is where can you invest that money from your retirement account and put it into something so that it keeps your retirement account growing and producing cash flow and equity?
Yeah, so you're aware you're not able to use depreciation, but you have the money to invest, and you might as well get the best ROI, even though you can't take advantage of depreciation with it.
That's
Uh,
right.
you're not if you're in stock market, you're not going to take advantage of depreciation either, so don't worry about it. Yeah.
That's right. So,
And one of the nice things, Mike, is when the investment is sold, and you don't have to recapture that depreciation at that end and pay the extra tax that might be there on it. So
that's
because
correct.
it's in your IRA.
Yep. And there again, when you convert from the traditional to the Roth, then you have no taxes when the money comes out.
Hmm. That's really nice. So again, just a summary here. If you're not already, don't already have a custodian that allows you to invest in real estate, check it out. Give us a call. And if you want to talk about using your retirement accounts for your investments, again, let's talk. We have some good information on that, experience with it. Uh, and we'd like you to know about that. So, Mike, what else today?
Oh, we could remind everybody that we are not accountants, we are not attorneys, we are investors. And these are some of the things that we have learned as investors, and we are passing the knowledge along.
And I didn't sleep in the Holiday Inn either last night, Mike. So,
That's right.
best to you and best to everybody that's watching.
All right. Thanks.